Hello, I hope you can hear me. You cannot see me, but you'll be able soon. Hey, good afternoon. Here I am. Yeah, so we're almost ready to go. It's 5 p.m. exactly. It's Labor Day. I know everyone is on holiday, so I'll try to keep it short and sweet so that if you are here, if you made the effort to be here, you'll be able to join your family, your friends back for the holiday celebration. So that's pretty cool. I have a lot of friends that have taken a long, really long weekend to take vacation, so I don't expect them to be here. Anyway, I had a couple of things to do at home, so I just didn't move much, and I come back from vacation pretty recently. Anyway, so I'm fine. What else? Yes, Croissant is live. So this is the last time that I'll do this on Monday. I've run a little poll recently, and everyone mentioned, well, almost everyone mentioned that they wanted to go back to what, or they actually preferred Saturday versus Friday or Monday setting. So we'll go back to where it was before Saturday morning, 10:15 a.m., something like this. That's fine. I mean, if it was better for me, for you, either way. So if I when I do this on Monday, I can have kind of a longer weekend. But if I do this on a Saturday morning, that's not a big deal either. Big deal either, just because I'm gaining some time for what I can do on Monday anyway, and basically I still work a little bit every single day anyway. So we'll meet again on Saturday morning, 10:15 a.m., and we will go from there. So you've seen the illustration for today is NVIDIA and the kind of signs that we see at the top, which is, NVIDIA CEO signing chest on fans here. Again, that's always the kind of thing that you see at the top. So you just don't see this at the bottom. But anyway, so where do we go from there? Do we start? It's 5:02, 5:03. Again, I don't want to keep you too long, so we'll start. And what do I do? If I do this, does this work? Yes, it does. So what happens in terms of geopolitics? Eastern Europe, Ukraine, as usual. The gamble that Ukraine did by invading a small part of Russia in the Kursk region didn't give any kind of advantage. I've mentioned the last couple of weeks that it didn't really make sense. There was mainly possibly two objectives with this. Attacking Russia, knowing that the region is not really defended, either to force Russia to remove forces from the Eastern Front to the Kursk region to defend that part of Russia, or to trigger an escalation into a bigger conflict. Well, if it's any of these objectives, it didn't materialize, obviously, because Russia didn't, massively responded to a region that they can actually control. For them, I think it's not a big deal. It just it's like the Eastern Front. I mean, basically, just have to wait, and this will come back. And on the Eastern Front, I mean, the Eastern Front in Ukraine, the media is focusing on the Kursk region at this time, because this is where Ukraine is striking. They even started attacking the nuclear power plant in Kursk. So they are focusing on this, but they are not focusing on what actually happened on the Eastern Front, where the Russian army is making progress at a much faster pace than they did before, probably because, again, Ukraine had to deplete some of its troops from this front to attack Kursk. Again, Russia did not bite either on that front, and the front weakened on the Ukraine side, and now Russia is making advances. So it seems to be a kind of a total fiasco at this point for Ukraine, probably not reaching any of the objectives they had set at the beginning. And this is where we are now in Ukraine. You've seen, just a little insert about a U.S. F-16 jet that crashed recently. So they said that it was not hit by a Russian missile or whatever. It just crashed. That's basically what they said. But the other news, I mean, according to the Wall Street Journal itself, in this specific article, they're basically mentioning that the F-16 that was supposed to be a game changer in the conflict with Russia is actually not, simply because the F-16 that they send, they are pretty old F-16s, and they are actually vulnerable to the air defense of Russia. So basically, it's a non. It doesn't give any kind of specific advantage to Ukraine having this F-16. But again, considering that it's pretty old material, I think that the other thing is that it allows the US to renew its arsenal, giving away old stuff, and to replace it with new material, which again fits the military-industrial complex in the US, which is obviously the primary objectives of the permanent war in the US since 2001. Okay, where can we go from now? So yes, I mean, you have this. So it's just an illustration for Europe, because Europe is divided at this point in the conflict with Ukraine. They cannot agree of further packages of aid, of financial aid to Ukraine at this point, and even on the military objectives for the weapons that they are providing to Ukraine, they cannot even agree on that either. And basically, what they said is that they will leave the decision to each single country to decide they can use their weapons to hit Russia or not. So Europe is getting more and more divided, according to Ukraine, on the Ukraine situation. I remember last week I mentioned that Germany had a pretty big issue with this, since it has been discovered that it was a Ukrainian team commando that blew up the Nord Stream 2 pipeline. So it seems that it's the division inside Europe about Ukraine is spreading. So I also put this for this illustration for two reasons. You have Pavel Durov here, who is still in France. He cannot leave the country. From what I've seen, he has been released after what was it, $5 million bond or something. He's charged with offenses, such as using his online platform, his platform being used for illegal transaction, and the usual suspects like terrorism and human trafficking, all that kind of the regular accusations when a country wants to shut down a specific I would say technology actor, but at least people, basically, that the West doesn't like much privacy, which is, an issue for considering if you want to talk about democracy. and they are trying to rein in all the platforms that allow actual secrecy, where the government cannot sniff what's inside. And basically, that's the reason why Pavel Durov is detained. Detained, actually limited his movements in France. So the risk for him is about 10 years in prison, 500,000 euros of fine, again for the risk that I've for what I mentioned before. What's also interesting about the status of democracy and freedom in Europe is that, and that's why I like this funny illustration with Macron and the crown on top of his head, is because Macron lost the election that it's now 2 months ago. He lost the election, and he should have named another prime minister from the opposition party, which actually he didn't yet, because he doesn't want the party from the to name anyone from the party that won the coalition that actually won the election, and he doesn't want to name someone from the largest party in France, which is on the you have what they call extreme left and extreme right. So that's the situation now. So basically, you could say that democracy is not existing in France either. Just a quick reminder about Ukraine is that the Ukraine government is also illegitimate at this time, because if you remember, Zelensky canceled the elections. It was in April or May this year. So this is basically where we are now. Just another reminder that another thing that will pose problems in Europe is that the AfD, another far-right party, won the election this weekend in Germany. So that will be difficult for, let's say, the parties currently in power to claim to have the higher ground in terms of freedom and democracy to stay in power. So that would be interesting to see how it develops next. So so the Middle East. It's interesting because the Middle East, you see here the concentration of all the U.S. Navy concentrated both in Mediterranean and around the Persian Gulf near Iran. It looks like so everyone is getting ready to have a major, bigger conflict in the Middle East to defend Israel. What's interesting is that there's, so that's what I've seen. I had difficulties to find confirmations about that, but the U.S. Navy doesn't seem to have any aircraft carrier in the Pacific at this time, which is the first time, I believe, since from what I've read, since World War II. And it's interesting because Israel is called by the U.S. its first ally for whatever reason. But the key is that the U.S. is ready to risk everything on this one and forget about all the rest of the world. For instance, specifically China at this point. If China wanted to invade Taiwan tomorrow, basically I don't know what the US would be doing at this point, since they have no forces there. So probably China would be able to invade Taiwan pretty easily at this point. Another interesting point about this is the little insert that I have on the bottom left, where now the Houthis are controlling the Red Sea totally. You don't see any kind of US carrier in the Red Sea, although Egypt and Saudi Arabia that are bordering that are on both sides of the Red Sea are U.S. Allies. The key is that no one can enter the Red Sea without the Houthis being, agreeing with that and letting the vessels go. So the little incident on the left was that, it was, when was it? It was in November, almost a year ago, saying that, the Houthis had become dangerous rogue nations and the U.S. Navy could crush them. A year later, so it was a week ago, the title from the same guy who wrote the article was "The Houthis have defeated the U.S. Navy," and I believe it's kind of embarrassing at this point. So same thing. Basically, it's what I was saying about the opposition between the U.S. and China. Again, which I find interesting, why the US is so focusing on Ukraine rather than when I believe that the major opponent of the US at this point is China. Again, it's probably to fuel the military-industrial complex, because Europe is the primary buyer of US weapons, being in NATO, and that was another reason, by the way, to extend NATO to Eastern country after the collapse of the Berlin Wall in 1989, is because when you join NATO, basically you have to conform to the NATO defense system, which kind of forces new countries in the alliance to buy US weapons, and then again fuel the military complexity in the US. So why was I talking about US versus China? Is that because China at this point has started to really asserting its domination in that region of the world, specifically with the US getting away from there and focusing on the Middle East and Russia and Ukraine. So now we've seen recently multiple repeated territorial excursion of the Chinese army into India. These are encounters that quite happen now very often. It has not led to any really major fight at this time, but this is a risk that it can happen. And the other major escalation in South China Sea is the Chinese Coast Guard vessel having many encounters with Philippine vessels in Philippine waters, and the Chinese Coast Guard arraigning some Philippine vessels in the Philippine waters. It's again an excursion into an extra territory that is not Chinese, and again that's China basically asserting its domination on that region of the world. Next, because I said that we would try to go fast, and I think I won't try right now. So government, I wanted to do a quick, a really quick status on freedom and privacy in the Eastern, in the Western world. Sorry. Because now the global censorship by the Western government is getting more and more obvious by the day. You saw that last week, Zuckerberg acknowledged the censorship, the pressure from the US government, the current administration, to censor information about COVID on its platform, Facebook. You now have UK throwing people to jail for comments on Facebook. I've seen a teacher recently, so not later than today, that was also arrested not to implement what the government says about transgenderism. So basically, the freedom of thought and the freedom of speech is attacked everywhere in the Western world. You also have, you probably have seen this as well. You have Brazil that is starting to block X for refusing to censor some specific account. The funny thing is that Elon Musk has started to disclose the first approaches by the Brazilian government for asking X to censor some accounts, and they were mentioned separately without letting anyone know, which is kind of interesting, right? For a supposedly democratic regime. And the other very interesting thing is that is the same thing as in Brazil as the other Western countries, is the MSM media in Brazil is losing influence, is losing power, is losing viewership, ratings, whatever you want, and they are the first to cheer about the reduction in terms of free speech, probably in the hope that they will regain some viewers, and I don't know, but they are just now TV state TV. Sorry, basically, and you had the similar situation in Indonesia as well. I've seen they are considering now blocking Telegram due to allegation that the platform is being used for the same thing. You get it? It's spreading pornography, gambling, illicit activities, and terrorism, obviously. So that's basically not a surprise. Just a quick anecdote. I was in France at the beginning of August. I came back mid-month. And for the first time since I came back and got to the custom border, I didn't have to show my passport because it was, facial recognition. So basically, I went to the border customs, and I saw the officer say, "Hello, Mr. Bastien, how are you? Welcome back." Well, that was fun, not having to present my passport. So this means that you have facial recognition everywhere. So I don't know at this point what makes a big difference between the US and China in terms of tracking what its population does. Again, privacy is long gone. It's just now kind of official. But I guess, most people will find it convenient that they don't have to show their passport at the custom borders. Whatever. Another interesting here for football fans, you might have seen that all 32 NFL teams have implemented or will be implemented for this new season facial recognition in the stadiums to identify every single attendant fan inside the stadium at the games. Again, all the videos that you've seen on China, tracking the people live in the street everywhere, is coming to the US, and basically we are not so much different at this point. So now we go to economy. Economy is so the interest rate cuts are coming. Obviously, this is what Powell said last week, or the week before. I talked about this last week, by the way, and it is one of the longest time since after stopping a rate hike. We had to wait for a rate cut. So I think it's 13 months. This will be 14 months if the Fed cuts at the next FOMC meeting. And this will be actually this is already, but this will be the second longest time between the end of the rate hike and the rate cut since, guess what? June 2006, September 2007, which was right before, the escalation into the global financial crisis that we knew in 2008. So basically, with this period of interest rate hikes, what happens is that we are, oh, I can move this, that's why I do this, because if I move this, shoop, this work. That's the interesting point about, the test that I made. If you've seen this weekend, I can move stuff around and make this a little more visible when I have issues like this. But anyways, so you see that after the rate hike, in 2022, with the start of inflation, this triggers one of the biggest drawdown actually in the treasury bond market, which is minus 11%, if I remember well. Now it's recovering slightly, but it's not recovering massively. But you have to understand that this is the biggest one. The second biggest was actually before, no, at the time in the late 70s, where we had this massive rate hike. And this one was really fast. Why? Because the Fed had increased the rates at the fastest pace, that they had in history. What else can we say about that? But I think, that's probably a major shift in terms of environment, because since it didn't happen since the 70s, what happened after that, if you remember well, no, before that, it was the major shift was the abandon of the gold standard. So there's no gold standard anymore, but it just probably means that the markets are now in a much different space than they were at the time. So now we go there, and what do we see here? It's the Fed effect on U.S. interest payments, where you can see that the U.S. net interest payments on the national debt has hit now 861 billion over the last 12 months. It's just crazy. It just doubled in about 2 years. It's just insane. And on top of that, it doesn't even include 100 billion of Federal Reserve payments handed to banks and interest rate. What's interesting, by the way, about this and the Fed is that the Fed, which is a privately owned institution, owned by the banks, they are paying the banks in interest rate. Isn't that interesting? And what they are paying this with, inflation, obviously. To me, it's a kind of a scam, but that's how it works nowadays. What else? Yes, you can see that the Richmond manufacturing survey has retracted. It has dropped at the same, and this one specifically, the Fed manufacturing index is very highly correlated, up to 90%, to what did I notice? I lost my train of thought, with the PMI manufacturing index, so which means that probably the manufacturing will go down as well. The Richmond Fed Employment Index drop as well, and all these statistics are going the same way, which indicates that the economy is in a much weaker position than it's actually advertised. Last chart. On the left, I didn't even see. Yeah, probably you've seen it. So last chart on the left, this is the inflation, or the variation, the annual change in price index, which is the inflation. You can see that specifically the core PCE, which is the main indicator watched by the Fed, is flattening. It's not going down anymore. And if the Fed is actually aggressively cutting interest rates to support the economy, this might well actually trigger another wave of inflation. This is something that we have warned about for quite some time now. But what's interesting about this debt is actually you see that the US is paying a massive amount of debt. So the first benefactor of US interest rates going down is actually the Fed, because it will reduce the interest rates that they will pay for the debt. If you put that into comparison with Japan, and the impact that only a 25 bips of interest rates hike had done to the yen and the unwind of the carry trade, we are entering situations where all the Federal Reserves around the world, basically, who are working on based on debt, which is all the Western world, from the US, Europe, Japan. They have come to the sense that basically they cannot move the interest rates high to counter inflation. So basically, what I think right now is probably that they will lower interest rates. We have another wave of inflation, and we might be in a situation where the government will, or the Fed will not be able to hike interest rates anymore. And basically let inflation go. So obviously this will make people poorer, obviously, but a very interesting point for the Fed and US government is that with inflation, you kind of repay your massive debt just because you pay with something that is not worth anything. So we move to markets. Last week, markets were kind of quite quiet. If you let me show you something. I need to change my banner at the bottom just to tell you that what I'm saying here is not an investment advice, obviously. So, okay, here we go. So yeah, so where did we go from there? So markets, you had it was kind of a quiet week. Obviously, we had the Nvidia earnings that influenced specifically the tech sector, which is one of the very few that is negative for last week. But the SPY managed to be up. So Dow Jones up as well. We had some kind of window dressing at the end of the month. We'll see how it turns into September. You know that September is usually like August, but mainly September and October are usually, if you look at seasonality, higher volatility months. So we'll see how this turns out. You had bonds last week going down. So we'll talk about this as well. We had Bitcoin going down as well, and you know, if you look at the rest, basically it's kind of flattish. Gold was flat. Oil was slightly negative. There was, I mean, it was not a really big deal basically at this point. Just a quick look at the performance of futures. So if we look, you know, on the 1 month performance in August, we've seen that the suspects that you have might notice, which is oranges, cocoa. I guess very few of you are trading this, but despite the volatility in the stocks, the Nasdaq 100, the S&P 500 managed to end up positive a couple of percent. So that's interesting because you know, we've talked about the recovery, the massive recovery that we had after the Bank of Japan vowed to not increase interest rates, which actually triggered a massive a massive comeback for the stocks around the world. Other things that what can we do about this? You see that the VIX has been crushed again by 7% despite the month to month, despite the massive spike that we had at the beginning of August. Again, if you've followed my post on LinkedIn, you have noticed that. So I've shared a graph that showing that basically, or maybe I even talked about this last week, that it was the fastest volatility crush in history. Totally insane. What can we talk about? Market concentration as well. Market concentration going into the tech, telecom, healthcare is now massive. It's about 43% of the global market, when the other sectors such as financial energy and materials are only now 24-25%. So the market is heavily biased. I don't know if I put this, but basically I look at this morning, and if you look over 10 years, over the last 10 to 15 years, all sectors are basically kind of, maybe except the financials. So it was after the financial crisis. But since 2009, 2010, you have financial that are flat to slightly positive. You have the tech sector that is doing well, obviously. But all the rest are negative compared to SPY. Yes, again, sorry, compared to SPY. My reference is being the S&P 500. So you had only the financial, if I remember well, slightly or being on par with the S&P, the tech sector only overperforming the S&P, and all the other sectors underperforming the S&P. So obviously, if you are doing kind of a momentum strategy, you will end up only in tech anyway, just because that's the sector, and that these are the stocks that are performing and that have been performing over the last 10 to 15 years. So so we had NVIDIA. If you looked at it, NVIDIA dropped about 8% on the earnings that beat expectation, but basically buy the rumor, sell the news, kind of. So drop 8%, which represents about 250 billion in terms of market cap. So the media loves to give that kind of number because everyone says, "Oh, that's big," but again, that's only 8 to 10% of the market cap. Anytime you move 1 or 2%, you will have a big number at that level of concentration in the market. Now, the other thing interesting is that you can see that from May 2000 you have the insider trading by Huang Jensen, and you've seen that since 2020, he has been massively selling his stocks. He didn't buy actually any, which is the interesting point here. If you look, even since 2003, basically the guy has only been selling his company stocks to kind of cash into something else, probably. But it's interesting that you don't see any buy by the CEO of the company of the stock that is actually managing. Other financial news about stocks is our big friend Warren Buffett, who has been selling Bank of America like crazy since mid-July. I think the total of what is sold was $6.5 billion of shares of Bank of America. I think I've shared something like this. So here the green one is JP Morgan. Both are spreads compared to the financial sector. So it's the overperformance of each stock versus the XLF, which is the ETF for the financial sector. So you had JP Morgan overperforming the financial sector, and you have Bank of America that has not been performing the financial sector since, well, at least here I have since 2018, but I had made the chart for much longer. It was basically the same. Which means that Bank of America doesn't increase any, let's say, added value basically to the sector. There are also some concern about the solvability of Bank of America. You've probably heard about it. I don't know if this is why Warren Buffett sold that many shares of Bank of America, but when you see, so on the second chart on the bottom right, what you see is that since Warren Buffett started selling, obviously the price of the stock of Bank of America started dropping massively. It looks like now he's done selling. The stock is not moving much more down. But what's also interesting about Bank of America these days is that Bank of America has also implemented a massive buyback program, very likely to support the price of the stock. But at the same time, it helps Warren Buffett to exit this position on Bank of America at a very decent price. So basically, you have these two things going on at this point, and it's interesting to put that in regard. Buffett selling and Bank of America implementing a buyback program to support the price. What do we have here? We have the S&P 500, which has reached again its all-time highs at the end of August. Everyone is cheering, everyone's getting greedy. If you want to look at this, at what Warren Buffett says, what's interesting is that volatility has been crushed as well, still being up to what point? Again, remember that on the seasonality basis, September and October tend to be more volatile than other months. So this has to be taken into consideration. Now that we are back to kind of low level of volatility. This is the Nasdaq, which hasn't recovered totally from the drop. You can see that it's kind of a small divergence between the S&P and the Nasdaq. When the S&P has recovered totally, the Nasdaq did not. Sorry. So we have bonds here. So it didn't make, once it broke out, when was it? It was mid-July. It didn't move much, even, reverse kind of some of the gains recently. Okay, well, we'll see. I don't know much what to say about this. There's always this concern about the debt, the inflation. Probably very few want to be invested potentially in treasuries, considering these again issues on the debt. Unless, again, a major risk, a major conflict starts to happen, then obviously you would have some de-risk on the risk of assets such as, treasury bonds. Treasury bonds and the U.S. debt supported by the U.S. military, and so far the U.S. military is the biggest of the world. So that would make sense. Then you have gold and that kind of thing. So this is where we are now, basically. And I think that even with the Fed announcing some major rate cuts, the reason that it's not going higher is because of the concerns of the US debt. Here you can see gold. Gold that is still around is highest high. It seems to be stalling at this point. There's no catalyst at this point to take gold higher, which is interesting. There would be probably need some new developments on geopolitical risk, or more insanity from the Fed to propel gold higher. We don't know. We'll see. What is it? That's the US dollar index. So you saw that the US dollar dropped since July quite significantly. It recovered over the last week. We have kind of a lot. It basically doesn't seem to be going anywhere, to be honest. But this triggers a lot of reversals in the price, which is quite detrimental for momentum-based and trend following strategies. This is where that kind of strategy is losing money. So when you see this on the US dollar, when you see gold not going much higher, you have a kind of a reversal last week on bonds as well. Bitcoin is still entangled into this this flag. What's interesting is that Bitcoin seems to be weak at this point. However, the two charts that you can see here shows that some whales have entered the market pretty significantly to accumulate some Bitcoin. And in July, for instance, the large holders accumulated over 84,000 Bitcoin in July, which was the highest since 2014. So yes, 2014 was not a massive. Bitcoin was not what it is today, but I believe that it's even more impressive because in terms of price, that's a much bigger dollar volume of accumulation in a context of Bitcoin showing some weaknesses, some range trading. This is the same. This is the same similar chart that you can see at the bottom right. Oh, I didn't even check if you can see this. Yes, you do. Where you see, basically what's happening, you have new whales accumulating some Bitcoins. Well, it's not exactly the same chart actually. This one counts the new whales that are into the market, which means that there are many more big players, big holders of Bitcoin, which is exactly what happened when we had that kind of similar consolidation in 2020. Let's say from 2018 to 2020, before a massive rally after that in 2021. So it doesn't mean it will happen again, but it just tells you that people are accumulating Bitcoin at this price. Do I have anything else? No, I don't. But the point that I wanted to make, maybe before closing on this one, the point that I wanted to make is the following: is that even if the markets are going up, the equity markets specifically, the environment is quite difficult because you have a lot of reversals in the market. Like I said, when you are doing risk management specifically, if you look at equities like this and or like this on the S&P, it hurts your performance. Why? Because when you are doing some risk management, at some point you have to cut even if you are long here, you have to cut your position because you never know where the market will be going. So risk management can hurt. It can save you, but it can also hurt you specifically when you have that kind of V-shape recovery, because there's a point at which you are forced to reduce your position. So which means that if you take the downside full size, you won't take the recovery full size, and which means that your performance will be lower to be single and simply invested in in equities, for instance. So that's the downside of risk management and protecting capital. This is something that very often people do not investors do not understand and say, okay, I'd rather be invested in a SPY. I just let it run and it will be okay. What it would be different if something like this unravel into, let's say, 2000 and 2003 sorry, situation, or 2007, 2008 situation where you have massive drawdown after the internet bubble exploded and during the great financial crisis. This is where you protect your assets with risk management. But obviously, this risk management as a cost. What I think is the most important, not only it protects your assets, meaning that your assets become available. You can cut a position when you have lost 10 to 20% when the market is down 50%, which was in 2008, for instance, at the max, I believe it was 55 something. If you want to reallocate your money, it's easier if you had risk management in place and you lost from basically from 10 to 20%, rather at the bottom when you are down 50%, basically you don't exit your position at this point. It's too late. And that's the kind of situation where you have this, when you, in terms of risk management, you have to cut your position. And that's the kind of situation that happened in April. If you remember well, we had a drop accelerating, which forced some kind of exit at this point, right before the Fed said, "Okay, we are good to go," at the end of exactly at the end of the month, and then everyone was reassured at the market that the Fed will do what it was supposed to do, and then you had this kind crisis here, which was linked to the unwinding of the carry trade, where the next day the Bank of Japan said, "Okay, we cave, we won't be increasing rates," and then you have that V-shaped recovery. So, I mean, it can save you, it can hurt you. It's just in what risk management does is that you may miss opportunities, but it will save you. And I think that's important. In markets, the most important point is to be able to play the next day. If you're out of the market, you're done, you'll never come back. And that's not what we want. We want to be able to play to get the next opportunity. Okay, so 50 minutes, slightly shorter than usual. I did what I can to keep it short. And basically that's it. So guys, I would like to thank you for your time as usual. So again, we're going back to our Saturday schedule, 10:15 a.m. This coming Saturday. And I wish you a very nice end of day on this Labor Day. Enjoy it. Enjoy the week.